Welcome to Venture Unlocked. Today we are talking about something every founder needs to get right, finding the right VC partner. It's not about just securing a check, it's about building a relationship that lasts. Joining me is Bhupesh from Marwari Catalyst, a portfolio manager who's seen firsthand what makes a great founder VC fit. We will break down what VC really look for, the value they bring beyond money, and how founders are choose investors who are true partners, not just funders. Let's dive in. Hi, Bhupesh.
Hi, Shubham.
So, guys, today in my episode of Venture Unlocked, I have Bhupesh Kankaria, who is working with Marwari Catalyst. Marwari Catalyst is startup accelerator based out of Jodhpur. Bhupesh is working there as a portfolio manager. So, Bhupesh, can you please tell us about Marwari Catalyst and about your role, what you do, and how your role with the startup, how you're helping them?
First, thank you, Shubham, for having me. It's a great opportunity for people and a great initiative started. About Marwari Catalyst, so we are a startup accelerator. We basically work with early age startups. We help them grow from 10x to 100x. So we help startups in all the segment from legal advice to mentorships to guidance to any support they require. So we basically are mentors with the skin in the game. So we do cut a check in the all the startups we onboard into our here for the last past 1 year as a portfolio manager. So I basically look at the portfolio startups which have been onboarded. Once they are into the program, I deal with them, I help with them, I get or I help in any kind of advice they require. And majorly I look at the funding part post our program for the startups.
So, Bhupesh, there are lots of things going on in the startup market, and people are like very curious about things. And every time when any single person is talking about a startup, they're like, "What was the thing VCs are looking in founder when any founder is going for funding?" So everyone's talking about फाउंडर्स में क्या देखते हैं वीसीज या वीसीज जो हैं उनको क्या चाहिए होता है फाउंडर्स में ओके सो लेट्स स्टार्ट गोइंग ऑन टू अबाउट founder VC fit and what was the relationship that's built between founder and a VC. So can you just elaborate about this thing, like how this thing will work? And as a startup accelerator, what was the thing you are seeing in the startup founder? Just because you are directly working with early age founders or early age startup, so what was the first thought when any founder are coming to you in your mind going on, and what you see in them? Like what was the spark in them you are going to see? Can you just talk about that?
So I'll start with a little background of how the funding history and everything works out. So
Sure,
majorly
sure.
what I've seen in this past 1 year or something is people generally don't know what stage they need to get into a VC or what is the right stage they need to kind of get to or approach any VC. So sometimes people at the initial stage go and ask about VC for funding. Obviously VC who's got to put multiple of crores won't go into an ideation stage. He needs solid validations and bigger numbers to come and validate the business. So, as a startup owner, one thing which is very important for anyone who's starting a business, who already started a startup, is like there are stages. At every stage, there are the different kind of people who can support in your journey, and that's why, which is the common mistake I have seen is. So, the right approach for according to me is at an ideation stage, you should either go to an incubator first to have a basic understanding of the market or the ecosystem and everything. So once your incubator process is done, once your idea is validated, then you come to an accelerator which helps you scale your idea basically or expand your idea into markets, helping you grow to market strategy, organize your startup or more, and kick off. And you can then start with your journey onto the major funding parts. If required, if you're not looking to raise bigger amount of fundings, you can always go to angels or even smaller people who can put little smaller checks. After that, basically an angel round, you can say that. So once an angel round done, now you have validated the market, you have numbers coming in. There's a growth projectivity is happening in terms of numbers and the sales. So then that is the right time to go to an VC to raise funds. So either you can go to a VC or a fund, proper fund house. Once then you can raise a good amount of money to buy them. And also, if you go to a VC, VC also needs a good validation from your business. Ki bhai, it's not an idea, it's not a basic thought which you're doing it. It's something which you have already tested on the market. People are loving it, and we are here to expand it as big as it can be.
Got it.
So, from a VC perspective, VC always look for the broader vision with realistic plans. How you can VC are here to help you expand your market pan India or even global. They're not here to basically help you in building your startup. at the ideation stage.
Got it. So, like, if we can break down this thing to make it easy to understand. So, if you are at the early stage, like you just have the idea. So, right place for you to go for the help is incubator, then
Correct.
accelerator, and then your angels will come in the scenario with the help of accelerator. And then when you build something and you have something and you have some numbers about your business, what I can say, and then after you can go for VC firms. And so, Bhupesh, like when we talk about VC, most of sometimes VCs are like sector agnostic, and sometimes they are like they are looking for some metrics, like they are looking for your capex, they are looking for your opex, and then different kind of terminologies are there. So can you just put some light on this part, like if someone is started, they are in the stage where they need help from startup accelerator, so when anyone comes to you, so what kind of metrics you guys are looking for, and if you have any story regarding this, that will be good for everyone to understand this thing.
So I actually have two interesting stories according around this. So one is from our perspective, we look at an early age startup with some kind of value, either in terms of early traction, early revenues,
Okay.
MVP stage, or if you're an app or a like data company, so some traction from your website, some app download, or something like that is what the validation we look, and we basically take the bet on the founders. So how the founder is about that business, what is his vision to build something. So we are always here to support startups in their journey, not here to control the startup. We are here to like you can do whatever you want. We are here to back you up, and we are here for a second opinion. So major what we look at is the founder's background, how unique the idea is, and is this really the need of the hour? Basically, market timing, what you can say. The market timing of that product is ready. So, example, if you talk about Zepto, so if someone would have asked about Zepto 10 years back, no one would believe कि भाई, this is a big idea, this is a wrong idea. Because market was not ready for that quick commerce. But now
10-minute delivery is
everything
like dream that time.
again they were ahead of their time, but again people were not ready to accept. But now if you talk about everyone wants everything like in 10 minutes. So now Zepto is even into ambulance money where they're even delivering kurtas, wedding suits to grocery store
Exactly.
or not in just 10 minutes, and people are accepting that. Even they want everything to be delivered in 10 minutes, be it anything.
In Gurgaon, in Gurgaon also, Blinkit started that 10-minute ambulance service.
Correct. Now, the next thing is 10-minute alcohol delivery, which is the biggest market I feel. People want that also in 10 minutes.
Got it.
So, this is what the market. So, market timing is one thing which is very important. Second is how fast you can scale up. And if you have to replicate this model in different cities or different part of the country, how fast you can scale up. So that is one metrics which we look again. This metrics basically depends on startup to startup. There is not a fixed criteria for any startups. I'm saying this because if
Okay.
you talk about Zepto, right? So Zepto was a model, and there was this investor, I won't like to name it, at the early stage. So Zepto was into the capex light model earlier. They were planning to use the kirana stores and everything. But then there is investor come in at early stage, and he suggested Zepto कि भाई you should go for a capex heavy model. So basically you should open your dark stores, have that inventory come in, and then sell out through those inventory which you have in your dark stores. That was the really kick point which turned the Zapto game. Because if you see the main margins and main everything comes, the profit which is there is in the bulk buying. So Zapto doesn't order through some stockist or some distributor. They directly go to the manufacturer, and so there are the maximum margins which come in. So that is the point turnaround which happened into Zepto by being a capex heavy model. So you must have seen people talking about okay, you should always have a light capex light model. You shouldn't have. So again, this things depends on startups, what they are doing and what they are trying to build over it, and how their numbers will come in.
Okay. Got it. Like as you told about Zepto. So in like in 2024, 2025 is just started. So in like just a recap of 2024, what was the most interesting industry that was not in the market till 2023 end, and in 2024 it's a sudden that got a sudden boost. So like as you are in the startup, that's your daily day work. So as per your understanding and as per your case studies that you're seeing in the daily life, what was the industry that's going rapidly in the startup terms, and most of the new founders are want to build in that industry, or any specific thing you see in that market?
So yeah, for me, the biggest or the most emerging field or sector you can say was fintech. Because nowadays we are so much around data, like everything is being recorded, everything is being stored, and everyone is using numbers to what not. You take from UPI transactions to your app, phone locations, to whatnot. The data is being used everywhere. So fintech companies who are able to use the data is gonna boom. This is not a sector which is just for this particular year, but I think for the next coming years, data companies, fintech companies would be the biggest companies to come around and challenge. You must have seen this example going around a few days where there were different prices coming across iOS devices and Android devices for Ola and Uber, right? You must,
Yes.
if you have
Yeah,
seen
I
that, right?
experienced this
So
one.
that is because of the data, right? Everything is
Yeah,
controlled by data. If
exactly.
we know or not, we are controlled by data. How we move, how we predict. So even if you go to an airport, why the Wi-Fi is at the airport is free? Because they're tracking your data, how frequently you're traveling, which city you're traveling to, class you're traveling to, and then their data is being used to target ads according to you. So if you're frequently trying to Ahmedabad, let's say for 10 times in a month, so we'll be able to see a lot of ads related to Ahmedabad. This is an example. So we are being controlled by data everywhere.
Okay. So fintech and data is the two big thing
Yes.
that take a big leap in coming years also. So like Bhupesh, like apart from this industry, when like you are a startup accelerator, okay. So when any founder are coming to you for the first time, so what was the basic ask they are coming with? Like they are asking for money upfrontly, or they are asking for any kind of non-monetary help from your side. They are looking for what kind of the basic things that came from their side as a requirement checklist for you, like if we are coming with you, these are the basic things that we want.
So yeah, we basically have a program called Thrive where we help startups to grow. So basically at our stage where what we try to like basically the first institution investor in any startup journey. So we are
Okay.
basically at a stage where no one believes in the startup idea. So we come in and we say, "Ki, bhai, we believe you, we believe in you, and we believe in your idea." And that's why
Okay.
we basically target the early age startups. So at early stage, yeah, people, if I say people know their particular domain, but from startup angle, they doesn't know much. For an example, how the legal side would work. So
Okay.
sometimes there are techies who have built their app. The app is ready. They have everything sorted in their website and everything, but they don't know anything about the finance part. For
Got
example,
it.
marketing side.
Okay.
So at early stage, even people doesn't have too much money to spend. So they need, yeah, at least if you could provide me some automation tools or software which I could use in my startups. So that's streamline the operations at the early stage. He buy
Okay.
there's a techie guy who doesn't know about finance. So we help startups securing that finance part, how to create your accounts, balance sheets, bookkeeping, how you can use leverage money into your businesses. What are the methods to keep money, which account to use, which account not to use. Very basic examples I'm sharing right now. But again, from the legal perspective, how to see startup and everything is an investor driven industry.
Got it.
Everything is controlled by the investors. So you must have seen startup founders getting kicked out of their own startups, right?
Yeah, I
So this
see.
is an industry which is driven by investors. So once a big
Okay.
investor, he controls major stakeholders. So I was talking about Zepto. So even the founders of Zepto doesn't hold more than 4-5% in the company.
Yeah, agreed.
75% is owned by funds and big family offices. I think in the last 6 months they have raised more than 13,000 crores. So they doesn't hold much equity. Even if you this case was going few months back about Anupam Mittal, Shadi.com, if you've heard about, I think
Yeah,
everyone
yeah.
knows about Mittal, right? तो यार उसका
Yes.
बहुत इंटरेस्टिंग केस चल रहा था अभी
Okay.
उसमें so he the Shadi.com is the company. So Anupam Mittal and his family owns 43% of the company, and there's this company investor in that company who owns 44%.
Okay.
And there was this debate and discussion in a case going around. So 44% being the lead investor in the company, he want to sell their stake.
Okay.
And Anupam Mittal was against it, कि भाई don't sell the stake. And he was against because the investor who was trying to sell off share was trying to sell it to the parent company of Jeevan Sati. So
Okay.
if that deal would happen, Shadi.com would have got and merged into Jeevansati.com, and there would have been no Shadi.com. So that's where this case is being going on. So now the case is being, I think, in court, and this is discussing कि either Anupam Mittal's can buy the whole company, or they will have to sell it off. So again,
Got
this
it.
is an investor-driven market. People who have put in more money always will control. That's why startup founders, even Ashneer Gover, got kicked out of. So that's the thing. It's a big industry. So
It's
we
a big
help
market.
startups even negotiating the term sheets, the clause.
Okay.
Like if a founders example, so we were having this discussion with a fund who want to come in and put 5 crores in a company in a portfolio. So I
Okay.
tell you, even so, the term sheet which we have received. So even if the company wants to like do an expenditure of 5 lakh rupees, they have to inform the fund beforehand. If it's not in the year plan, they have to come and tell ki I'm using this 5 lakh rupees. So you see how detailed the investors are into the businesses. Why they are even putting a 5 crore rupees, which is not a big amount, but they want to control everything. And sometimes at early stage, founders doesn't know how to react with it. They're like, yeah, they are putting in the money. I'm like, okay, bhai, we'll accept whatever you're saying and take out the money, which is wrong actually. Yeah, people at the early founder, because they are were not confident about their startup, so they take too much. We also like one of the common mistake also founder do is diluting too much at the early stage. So,
Got it.
as a portfolio manager, I always suggest startup founders that you should not dilute more than 6 to 7% in any round, because
Got it.
if you want to raise big afterwards, you won't even have too much stake to sell and capture big amounts. So, if you dilute too much at the early stage, then that's a very risky game, and even investor doesn't like it.
Got it. Like these are the some of the these are some of red flags. Okay, these are some of the red flags, and this might cause lots of potential misalignment in the startup. Apart from these cases, like what are the classic case of red flags or misalignment that will directly hamper startups? So if you have any example like that you faced in your journey with Marwari Catalyst, and any kind of case of a startup, if you can tell that story, that will be kind of good example to understand that scenario, how to deal with it, and what can be the challenges come, and how we can protect our startup from that kind of scenarios.
So one mistake or one point is you never dilute too much in single round, which
Okay.
is there. Another, you should always have a co-founder in your company. Sometimes there's too much echo in your head, ki you start doubting yourself. So you should always have a co-founder in your team who can support you. So we basically are not a co-founder, but we act as a friend or a support system to the startup. So sometimes at the early stage, entrepreneurship is a very difficult task, right? So people sometimes just
Got
need
it.
a backing कि भाई तू कर ले पीछे मैं खड़ा हूँ. So that support is
Got it.
what is people are missing in this journey. So we are here in that part. Also, while going for a round or while trying to raise fund from anyone, startup founders should always think if the person they're trying to raise fund also aligned to the vision which they are trying to create. Sometimes it's just not
Got it.
about the money which they are putting in. Sometimes the person you are getting on board into your company should also share the same vision as you are, because it's important in the long term perspective of the company. Example, if you are trying to build something which requires you to burn cash right now and your investor doesn't allow that, but you have to burn because to capture the market, to make your app accessible to everyone, you need to burn right now. Example like Zomato or Swiggy. So Swiggy is still burning cash to acquire customers, right? And that doesn't mean the Swiggy is a loss. It's a bad startup or not a good startup. That's a different
Exactly.
debate. So sometimes you should have people on your team or you are on your cap table who also align with your vision. Ki what you are trying to build, they also understand this and they're okay with to do everything to reach to their vision. For that, you might have to do some different things at the current stage in the short term, but everything should align to your long term vision. That is a major thing while going. And you should always ask. I have seen founders not asking anything back to the people who are putting money. They are
Got
just
it.
like, if you are able to give money, कि भाई पैसा दो खत्म. मतलब it's moreover you are taking a partner in your business. It's not like you're taking a loan from someone. So that partner also should able to communicate better with you. You should also have able to, because what happens after money comes in, people comes and keep poking you, कि भाई what happened to the money? How are you using it? Why you are not able to generate more? So that all these things after a while become so much challenging that you have to either kick that person out, buy back his share, and do something so that it doesn't become a red flag for you. So finding the right people into cap table, asking the question ki why you want to invest, why you want to associate with the startup is also an important part.
Got it. So like when you are talking with the startups and they are coming with their team, like as you talked about co-founders, so when you are looking for their background, so what kind of diversity you are looking for in the founders background? Like some of the companies, they have all tech co-founders, some have all marketing co-founders, some have all business or product co-founders. So to create a team that will last in every kind of a storm, they can able to handle all kinds of a storm or anything. So what was your side? Like when you was talking to anyone, like most of the time in the startup when early age founders are coming in, they are like all are coming from engineering colleges, all are coming from your MBA colleges or any colleges in India. But what was the right proposition of creating a selecting a co-founder. And when you are talking to any early age founder, what was your choice when you are talking when you're talking with them? Like what kind of co-founder panel, like, or a founding team panel you guys are looking for? What was the thing you are seeing in the founding team?
So if I say key, there's no right thing about key what is the right team. So some people are there who have solely built companies and become great, but they have found out right people in their companies who have taken the right things. So what I would always suggest to people is key, like at an early stage you might be like all techie founders in a company can build a company. So they can build company at a product stage, at a growth stage where getting the validation. But to scale up, you need people who are good in basically finance, marketing, even fundraise capabilities, who are good in communications. So that art of sales, negotiation, the art of storytelling. So you should have people who possess like few qualities like that. So someone, if you're, you should always have a person who's good into finance. So and a CFO role comes very much handy once you want to scale up. So at a early stage you might not require someone who is into very much into finance, but going forward when you want to do multiple rounds of investments, money is coming in, how to take that money, how to channelize that money, so that financial advice is very much important, I feel, once you are in that go journey. And so if you are a techie, then techie has to be the team main person behind that team. But then again, techie will just be dependent on the tech part. If you expect techie to do the perform for the marketing part, he might not perform well in the marketing field, right?
Exactly.
So you always can have people who can do smaller roles for you, and he will be like, "Hey, jitni salary, I will work it out." But if you want to have someone very serious in your company, well, this is a fact, right? Because if you're
Got it.
in a salaried person, right, how much will you work? You will work till your salary, right? You
Exactly.
won't have an extra motivation to put in. क्यों ही करना है?
Exactly.
Unless and until they want to do something great in their careers. But I think that's very less majority of people who are that. But that's why ESOPs come in play. So we have created a tool for ESOPs, and if you're giving ESOPs to your employee, let's say if you're not a marketing guy, if you're a techie guy, you have finance on your co-founder, but you need someone who specializes into marketing. So you can always have that person in your team. You can put out some ESOPs to you. And because of that ESOPs and everything, now comes a person is also entitled to a percentage of the company, which creates a sense of belongingness into his own mind. If this is my own company and whatever I do will also affect my valuation. So he will be also become seriously automatically without you being asked to it. Right?
Got it.
So that is what important thing is between companies, or this is what I think the founding team should have in sync.
Got it. So, like, this is the part, and like when if any kind of like these days, one news is flashing out in InShots is Zepto, one senior guy is leaving the company. So, when these kind of scenarios are going on in the startup, do you see any kind of fall in their operations or their quality or anything, like, and how to prevent this kind of situation? Just because in most of the startup this kind of scenarios are happening or going to be happen, so when this kind of things will be coming to you as a founder, how they can take a step towards it, and how you guys as a startup accelerator suggesting them how to deal with that kind of situation.
See, startup is a very fast game, right? You have to be fast in any field, right? In if in that is in terms of hiring, then you need to be fast. And also, if you have maybe hired someone, but that doesn't is a not right fit, so you should be fast enough to like fire them. So it's not something ki by if you have gotten someone, you have to stick to them. Startup are always a team game. You solely cannot go and build something which will be the next big thing in the world. You need team. So that team is always there. So someone he might leave a company can bring basically some roadblocks for a while, or basically the work can slow down a bit, but the work doesn't stop, right? So someone will come, other person will come and take up that work and start doing that. He might take some time to adjust or fill that position, but again, people are there to support him in the startup journey. And once you are that big, so your processes and everything is so defined that it doesn't much impact that decision. If someone in a senior management might leave it, but that process and everything is so sorted, the team is so well built that you can, as a startup, you can manage these issues. So we were
Got
like
it.
working with the
So, like,
startups. We had this in portfolio
okay.
where one of the head of marketing left, and it was about the
Okay.
festive time where we need to have everything coming in. So we didn't wait to figure out what we need to do, what we did not. So we know festive time is coming up, and we won't be able to basically stop. We cannot do everything to make the time stop, right? We have to work according to the time. So
Exactly.
we might have not found the right perfect match at that time, but we onboarded someone who did take care of the marketing. Again, he did not take care in the aspect we were planning to, but again, he was able to catch up to 80% of the plan which we had in mind.
Okay,
Again, that is
so that
understood
can
कि भाई
be
someone has left, you cannot 100% replace the person, but again, with time, that can be also done.
got it. So, in this scenario, do you see any kind of fractional CMOs or fractional CPOs? These kind of people are come in scenario, and is there any difference in the kind of value they are delivering to the company and the values delivering by the full time guy? So, are you see any kind of challenges in terms of the fractional guys delivering something or a full time guys delivering? So, any kind of scenario you saw?
See, always a fraction person or a person who is not a full time, the work or the quality that he will deliver cannot match to a person who is full time. Right? There is no
Yeah,
scenario which synergies could match. So even we have startups. So sometimes you don't require example if you are a tech product and you are trying to scale up. So sometimes you not require a full time CFO example. You need someone who's good into marketing. You need
exactly,
someone who's good into techie part. So for that, like example, we have
exactly,
companies, a fintech company in our portfolio who offers VCFO services, basically virtual CFO services to other companies or startups.
exactly.
Because sometimes the role of a CFO is not a daily task, where that CFO has to be involved into
Yeah,
day-to-day activities in the business. So sometimes a fraction person can be brought in, but again, that depends on the need of the company, what the company plans to do.
got it. Got it. Nice. So, Bhupesh, yeah, this is the question that I want to understand about the founder VC fit. Apart from that, I saw your LinkedIn post, and recently you went for one conference. Like, you guys are in Jaipur and you are hosting some. So, do you have any interesting insights from that uh, conference that you went for? And what's going on in city like Jaipur? Like, it's new for the startup environment. How's the thing going on in that? Demography, and what was the thing running in that scenarios, what was the mindset of the people coming for the startup there, what kind of investors are coming in that conferences? So can you just elaborate something about that event so we'll get some insight about that thing?
So we are basically we exhibited at an event called Rising Rajasthan. So that was a
Yeah,
government event which was supported by government, inaugurated by our honorable Chief Minister Narendra Modi. So this event was to showcase the power which Rajasthan holds and to attract more investment into Rajasthan basically. So there were a lot of MOUs which were done in multiple of like, if I'm not wrong, there were like 16 lakh crores of MOUs between were signed between India and foreign delegates for Rajasthan to set up
oh nice,
industries, to set up plants in Rajasthan, to build this a powerhouse and to showcase this as a big thing. So this was a event which attracted investors, delegates from pan India, even global. We had stalls from Japan delegates to Chinese to Spanish to Russians. To a lot of people were there to just showcase and exhibit their talent. And there were a lot of thematical sessions on different topics by different people from Gautam Adani to startup successful founders, from Amit Jain to Ritesh to later there are a lot of people who came into that event showcase. It was a 3 day event and it was a great event. There were like a lot of people coming in, and I remember I couldn't even sit for like 5 minutes throughout the whole 3 days, and we were so much into the event, and we actually enjoyed so much that we didn't even. Matlab, I don't even have a complaint कि भाई we couldn't work it out. And if I
got
share
it.
one interesting insight which happened with me basically was so there was this startup which came in. There was a gaming startup which reached out to me in that event, right? So they did raise. They have raised multiple of in $1 million, and they wanted to raise more for their startups. So we were
Okay,
having this discussion about his startups, what they were doing, how they're doing it, from where they have raised funds, and all this discussion they were having, and we were telling about how our portfolios, what our startups are doing, what they're investing. So from raising funds, he then on becoming, and then he decided कि भाई I like this startup of yours, and I want to be participate as an angel investor. From asking funds to investing into startups. So that
wow,
was a quick turnaround which we had in that conversations. So he was trying to raise fund for startups and end up putting some money into one of our startups, which
nice,
happened
very
in
nice.
that
So
event.
that's a kind of unpredictable things happening in the startup world, and we just have to make our eyes open just because lots of opportunity and lots of things are going on in the market, and
Sometimes
we
you just
can't
have to be out
predict.
in the market. Matlab,
Exactly.
people always love your passion. People love you for your passion. If you're able to showcase what you're passionate about, what you love doing it, you will find people who will be there to support in your journey. You just have to be there and do that. People will come support you, and you don't even know how things could happen and who come in and supported you in this journey. Whether there are a lot of other people
Got it.
who came in just to visit the stall, end up discussing with me for like more than 2 3 hours, and even we had to, like, the discussion couldn't end at that event, so we even here have to meet post event also. So people are so much interested into this segment, and I think startup is like after Shark Tank and everything, people are so much into startups. Like, this is the new FOMO, like how
Yes.
stock market was before COVID.
Yes, 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 exactly. So, Bhupesh, are you guys are also helping founders to get the right set of people in their team, like startup hiring and all? Are you guys are helping them in the scenario?
Yeah, yeah, we do. We help startups in multiple segment and finding a co-founder. Basically, we call it co-founder hunt. So we help
Okay,
startups. So yeah, we basically work with early stage startups, basically which are from like tier two or tier three cities. And we believe
got
that
it.
by you don't have to be from a tier one city to make a unicorn. You can even from a
Exactly.
smaller village come and become the next big thing. You must have heard about Zoho, right?
Yes,
I think Zoho is into everything right now. They are
I'm
into
using it in
ERPs,
my
they are
daily
into
purpose.
systems, they are into whatnot. And
Exactly.
this is they do a top line of 10,000 crore, and this is a
Yeah.
60,000 crore company, and all is been operated from a village, from one
Yes.
guy, bootstrapped, right?
And exactly,
So
like,
it's
if you can see the
crazy.
scenario, if you can see the scenario of Indian SaaS, Zoho is the king. We can say only this thing. Zoho is the king. Yeah, exactly. Like in some of the startup, from managing your people management to your daily documentation, that can be Excel and all, to handling your attendance, everything that will be managed with the help of one Zoho suite. You just have to pay for that subscription and everything. Exactly. They have CRMs. Exactly.
Like, so we also onboard or partner with different tools or basically companies to help, give out the basic services. Example like credits free for the first year or
Yeah,
for the
yeah,
six
yeah.
months. So Zoho is one of the tools which we give out to startups. So we onboard ki bhai, you can get 2 years of Zoho credits free, or 2 years
Nice.
or 2 lakhs, whatever you basically use it first. So, but that is a very big help for the startups at their early stages.
Got it. Nice. So this is a nice conversation, Bhupesh. So before ending this conversation, I just want to uh, put some point to you, like to conclude this one. Like, what was the key takeaways any early stage startup founder they have to take before starting their journey, like as they are at the ideation stage? So what was the top three takeaways from your side for that kind of founders?
Who are about to start their journey or who already started their journey?
They already started. They are thinking to go for any incubator or accelerator. So what was the to start with, what was the three takeaways for them?
So one takeaway, basically, anyone who want to start is key. You should never move away from what you started or what you were passionate about from the beginning. Is when investing too much or diluting too much or getting talked to so much people, and modifying your pitches and everything, people sometimes forget what they started and what they're trying to build out. So one is always stick to the vision of the plan, why you started something and what you wanted to build. So sticking to your basic is one other thing. Second is always put money on the team. Matlab, if you want to hire someone who's costing a lot and you're thinking having second opinion on that, I would recommend to hire that, because having the right team is a game changer. If you have the right team, you can achieve way bigger things which you can imagine. Sometimes people think, hey, I'll only do this, I'll take care of this, why put so much money? But getting that right team on your board is very much important. And one another key takeaway I would suggest for a early age startup is key. Just be out there. People will come and support in your journey. You just have to be out there and just keep on doing what you do. Sometimes things might not go into your hands or into your planned ways. Sometimes there will be up and downs, but that passion is what you always should have.
That's a great insight, Bhupesh, regarding founder VC Fit and what was the thing startups are looking for and what you guys are doing. So thanks for coming to this episode. We will catch up sometime more for a different topic. Thank you.
And then Shubham, thank you so much for having me. It was great chatting you. Chatting.
Thanks.
Thank you.